Hello, humans, and welcome to another episode of Gen X Gamer. I want to use this format here because, I was reading some investor reports and I wanted to break down something to you that I found interesting in the Sony report and why their prices are going up. The PlayStation 5 is 6 years old. It should be getting cheaper. Instead, it's getting more expensive. Well, it's not normal, right? Can you imagine the Genesis getting more expensive in year 5? Or the Super Nintendo, or the PlayStation 2, or even the original Xbox? It'd be crazy, right? But that's what's happening. That's what's happening right now. So let's talk about what Sony's telling investors, because there's a lot of opinions out there, especially on YouTube land, right? But I wanted to give you a different perspective. I wanted to give you the explanation that's being given to investors, and instead of you having to go read that report, I already read it. And I have the cliff notes, if you will. And I'm going to just lay it out in layman's terms, and just get down to the nitty gritty. And of course, I'll go over the technical term, what they use, but then I'll tell you exactly what it means. Sony said that hardware profitability is being impacted by rising component costs, especially memory, as we all know with AI and everything else, right? And late cycle economics, gas, wars, all that stuff. But what does it mean, right, when they say in these reports that they have margin pressure, right? What it really means is Sony's not making enough profit on each console. That model that we had before where they're losing money on the consoles and they make it up on the software, all that's gone. And it started with Nintendo, really. You blame Nintendo for that, right? But in layman's terms, the box is not making much money anymore. Parts cost money. So they need to raise the prices to protect their profit. Now, the other thing that they said, in their investors meeting, and this is what they told investors, they stated that they are focusing on monetizing the install base as the PS5 matures, right? They said it all elegantly, right? And we all know what monetization means, especially of the install base. Sony right now wants to focus on making money from people who already own the PS5. Like you, me, watching, if you're listening to this, you already bought the console. Now they need to make more money from you specifically through microtransactions, games, subscriptions, whatever they're selling, they want you to buy it, right? That's what they need you to do. Now, one thing that a lot of YouTubers have been talking about as reasons why this is occurring is the Bungie acquisition. Well, what did Sony tell investors about this Sony acquisition, right? Sony positioned Bungie as a key driver for expanding live service games and recurring revenue. And, of course, the legal term is acquisition, but they just bought them, right? Sony bought Bungie to gain live service expertise. That's what they really wanted. But what Sony later said to those same investors is Sony acknowledged that Destiny 2 underperformed their expectations, and that was tied to the acquisition. And they warned about future performance risks because they underperformed, and they were having impairment. Were having impairment with the Bungie acquisition. Well, what does that mean, right? Impairment. It's really when a company realizes that an asset is worth less than what they paid for it, right? You bought something and all of a sudden you go, "Uh-oh, this Nintendo cartridge is fake. This disc that I bought for Persona is a repro. It's not original, and I paid full price." Sony paid a huge amount expecting strong returns in performance, specifically of microtransactions. The performance did not fully show up, right? So now they have to admit that this asset that they bought is worth less than it's expected. So in simple terms, they paid too much. They overestimated the value. And that leads to restructuring. What did Sony tell investors about this, restructuring this deal and what they're going to do? Sony discussed restructuring Bungie and reallocating resources to improve efficiency. Restructuring, you always love, right? That restructuring term. What it means, they're going to fire people. They change how a company operates, right? You have to work lean, you have to be more efficient, and you have to improve performance. That's all you can do because the money's gone and, you didn't perform as you should have. So things are not working as planned, basically. So they need to cut costs, shift teams, and try to fix it somehow. That's up to management, of course. And another thing that a lot of YouTubers have been talking about, how does a Concord failure, affect these price hikes and so forth, So let's talk about what Sony showed through their actions, right? Sony pulled the game shortly after launch and shut the studio down behind it. And now they use the term they use for Concord. It was a capital expenditure. What it actually means, large investment into building a product. Yeah, a product that they spend a massive amount of money making this game. But it really, at the end of the day, it's a write-off. Accepting that the money that they invested will never be recovered. That's what a write-off is, right? The game failed and the money's gone. Just in layman's terms, that's a hit. And everybody knew that, of course, but, to investors, they use fancy words to admit their total failure, right? Now, let's talk about Marathon's performance. It's bad news on top of bad news on top of bad news, right? Sony indicated that risk remains if upcoming live service games titles do not meet expectations. The underperformance is really relative to their projections, right? Because they make projections based on these expectations that they have. And what it means, the game did not meet the expected targets, as we're seeing. It did okay, right? But not nearly as good as they needed to start seeing some returns on large investment that they put down for this thing. Now, what do they need to do? What are investors expecting to see? A strategic shift. It's what we call it when people get moved around because they're underperforming and not doing their jobs, right? But what did Sony tell investors, right? Sony emphasized cost discipline and optimizing its portfolio of games. That's what they're going to do. The technical term is cost control and portfolio optimization. But what it means, reducing spending and focusing on projects that have better returns. Hopefully that will mean for us a lot better, first-person adventures, one-player games, that type of stuff. Maybe some retro stuff, they'll bring back some franchises that we've been missing for a long time. They are being more careful with their money. That's what it means in layman's terms. They're being more careful with their money because they made expensive bets that did not pay off. And that's really a failure in leadership, if you will. Now, what does that mean for hardware? Well, what did Sony tell investors? Sony highlighted that the future growth will come with more software and network services than hardware units. So they're not expecting to have, gangbuster numbers like they did in the beginning. They'll continue selling, but they're going to use the term that they used is ecosystem monetization model, right? But what does that really mean? That the console is just one part of a larger system that is going to generate revenue, right? So they're going to rely on a lot of digital service, microtransactions, the usual stuff. So basically what they're doing is they're shifting to the console being the door, right? That's how they get you in. The real money comes after you walk through that door. So you pay the initial, at least that's what they're hoping for, right? If you get the most premium product, you pay $900 and then you're going to spend even more money after that. Oh, geez, that's a hard ask, man. Let me tell you. But what does it mean for you, right? What does it mean to the average player out there? Well, let me tell you the part that matters. Prices go up. Companies at this point, when they've had these kind of bets that don't pay off, they take fewer risks. Games take longer to make, and they're more selective. Everything becomes more cautious. You measure twice, cut once. What it means for you, you're going to pay more. You're going to get fewer creative games because they want to take less chances. You're going to have to look for indie developers for that, independent labels for that. And this company specifically has to play it safer because they've lost a bunch of money. They made some very bad decisions. Now, let me just end it by saying this. Sony is not collapsing. I can tell you that as a Sony investor. That's just my opinion, based on what I read. But, like I said, it made some really expensive bets on, and two big ones that didn't work. And now they have to adjust, right? They spent big money. Some of it failed. Now they're trying to recover. And of course, they're going to get it from you. This is, in the business world, this is not about greed. It's about pressure. And pressure always shows up in the price. All right, guys. Well, I hope I was able to break down that for you, just give you something a little bit different that when everybody's saying out there, everybody has their opinions, right? Of course, it's fair, but I think I'd give you, probably what an investor is looking at, right? As a Sony investor, this is what I'm looking at. This is what I read from the tea leaves. This is not financial advice of any kind, right? I'm just giving you my opinions, not only as a Sony stockholder, but as a business analyst, right? I'm just trying to break it down for you in layman's terms. What you invest in, that has to be decided by you and a professional out there that has your best interest at heart. Don't listen to YouTubers. Don't listen to me. Seek the advice of a professional, just like Sony should have had advices from better professionals not to make these bad bets. So now they have to raise prices, 6 years in? Jesus Christ, this is terrible. This is not a way to run a business. There is something really, really wrong in AAA gaming, specifically console gaming. All right, humans, I will catch you on the next one. Take care.